Hello everyone once again and welcome to my episode of Company Health Check series. So what is the Company Health Check series? Here I will occasionally share updates of my portfolio companies that I invested and am still holding. I will analyze them using the bottom-up approach, usually looking at the quarterly report all the way to the full year and beyond that. By generalizing my research in video format, I hope that I can make myself more informed of my past decisions, whether it's right or wrong, and also share my insights with everyone here. Hopefully all of us can benefit in some way, especially to fellow active value investors like myself. So, what we're going to talk about today? Today, we will analyze Apple's fourth quarter 2023 results. So, how did they perform? Let's dive deeper and take a look. Apple shares have already gone up 54% year to date. Many will ask, will it still continue to go up? Another 50% in 2024. So if you want to find out, watch on. But before I continue, do remember to subscribe to my channel and share my videos. Your support is very important to me. It is interesting to note that for the current quarter, sales in the US have edged up slightly year on year, as we saw a strong improvement of 13%, an increase of 13% quarter on quarter. So Europe also see a strong quarter on quarter growth of 11%, but if we compare this year on year, then we note a slight decline of 1.4%. China's decline both year on year and quarter on quarter has been expected due to the issue of the Chinese bans for iPhone in government premises as of earlier this year, right? So the overall declines in year-on-year revenue for the quarter ended showed a negative 0.7%, while quarter on quarter it in fact increased 9%, indicating a very good performance if we compare to the last quarter, but muted if we compare to 2022's performance. Total revenue for the full year declined 2.7% year on year, mainly due to the volatile currency headwinds. I previously estimated the overall revenues for the year to decline 5%. Therefore, Apple has beat my revenue growth estimates for this year. So for the product segment sales, for the current quarter 2023, we note an increase for the sales of the iPhone year on year of 2% and an outstanding performance of 10% quarter on quarter growth. While for the Mac and iPad, they have continued to decline due to the factory shutdowns last year, disrupting demands. However, we note that sales for both Macs and iPad have started to come back as we see an increase of 11% quarter on quarter for both Mac and the iPad. In my last episode, I mentioned that Apple services is a promising sector that we should look out for. And as predicted, the growth this quarter continues to grow at 14% year on year and 5% quarter on quarter. This indicates strong momentum for the Apple services business segment. We now do a comparison in Microsoft and measure its relative performance to Apple. But because different companies report and consolidate their businesses in different styles, we can only use this sort of analysis as a guidance at best. If we look at the personal computing or hardware business in Microsoft this quarter, we note an increase of 2%. The personal computing business in Microsoft contributes 24% to their overall revenues and is also a significant part of their business. Microsoft's main enterprise business saw a growth of 11%, which is spectacular for Microsoft, as revenue grew on top of a high base, indicating a very promising growth ahead for Microsoft. Microsoft Intelligent Cloud grew the fastest, and I think cloud is Microsoft's next promising business on top of its generative AI products. Overall, I think Microsoft seems to have more room for growth potential as a business, while Apple will see sales growth plateau in the near term until they create their next breakthrough. market have seemed to already attach a higher premium to Microsoft share price, and based on PE, it is currently trading at 36 times. It is in its 2023 forward earnings and 12 times its price to sales, while Apple is priced at about 31 times its 2023 forward earnings and 8 times its price to sales. My opinion is that Apple's valuation in the near term seems more overvalued compared to that of Microsoft if we ignore the forward PEs, but stripping off just to look at the growth potentials in both companies. Therefore, should there be no new upside surprises for Apple, then the stock of Apple should correct itself in the near term. We next look at the management outlook for Apple. CEO Tim Cook in November unveiled the next generation of Apple Silicon with the family of M3 chips, the M3, the M3 Pro and the M3 Max. And MacBook Pro lineup brings the most advanced technology to Pro users, while iMac, the world's best-selling all-in-one laptop, just got faster and more capable. According to the latest data from Student Monitor, nearly 2 out of 3 college students will choose a Mac eventually. Therefore, Tim Cook believes that they will be more ready and equipped to fulfill the pent-up demand gaps from the previous disruptions going forward for the MacBook and the iPads. Subscriptions to the MLS season passes have also exceeded management's expectations, and they are excited to continue to see that momentums next year. This proves that their strategy to grow services is very much on track to keep users engaged into the ecosystem. Performance in the services were broad-based, and as the company reached all-time revenue records in the Americas, Europe, and rest of Asia Pacific. And the September quarter record in Greater China, which is pretty unexpected for management due to the previous news about the bans of iPhones in China. Apple set new records in every services category this quarter. Greater China for the quarter came in at on a revenue basis of -2, but one thing to keep in mind here is that the FX impact was nearly 6 percentage points. So Apple China revenue in fact grew in constant currency. And underneath that, if you look at the different categories, iPhone actually set a September quarter record in mainland China. But what pulled down the performance was a combination of largely the Mac and iPad performances due to the disruptions. Transacting accounts and paid accounts in services grew double digits year over year, each reaching a new all-time high. Paid subscriptions showed a strong growth and have well over 1 billion paid subscriptions across the services on the Apple's platform, nearly double the number just 3 years ago. The current installed base of over 2 billion active devices continues to grow at a nice pace and establishes a solid foundation for the future expansion of the ecosystem. Management is therefore confident that the dynamics of the Apple ecosystem will continue to flourish. iPhone's active installed base had grew to an new all-time high, and fiscal 2023 was another record year for the switchers. For those who do not know what switchers are, they are actually new customers who just joined the Apple ecosystem. Apple continues to see extremely high levels of customer satisfaction, which recently measured at 98% in the US. Management expects the December quarter's total revenue to be similar to last year. iPhone revenue is expected to grow year over year on an absolute basis, however. MacBook's year-over-year performance is expected to significantly accelerate from the September quarter, and management expects the year-over-year revenue performance for both the iPad and wearables, home and accessories to decelerate significantly, however, from the September quarter due to a difference in timing of product launches. The recent quarter's all-time revenue record in India grew very strong double digits, despite having low share in the large market now. And so, it would seem that there is a lot of headroom to slowly capture the Indian market. The average selling prices should be lower than the worldwide average selling prices, but each country has its own journey to to be able to add value to its unique customer base. In India, a lot of people are moving into the middle class. Distribution is also getting faster there. Apple has currently 2 retail stores there, and they are doing better than anticipated. It is still early, and management still expects that there is huge untapped opportunities in countries like India for future growth expansion in the Apple ecosystem. Let's now look at Apple's profit and loss summary dating back 2005. Apple has shown resilience in terms of revenue and net profit growth from 2005 all the way to 2023. Apple has performed well during the 2009 mortgage crisis and also the COVID crisis, creating healthy returns to investors year on year. Net profit margins have seemed to come off, however, from 2022 to 2023, from 31% in 2022 to just 25% in the latest 2023 full year results. However, at a net profit margins of 25%, Apple still holds strong earning power. My only concern is whether Apple is able to innovate away from the crowd, identify new demands, and ride out the cost curve to further grow or maintain its profit margins. My holding period tends to be 5 years or above. So I identify Apple's potential in the long run and whether their current visions and investments will pay off to unlock further value to us shareholders. For expenses, I noted that cost of sales have improved, comparing both the current quarters 12 months ended 2023 to the 12 months ended 2022 by a negative 4% and resulted in better gross margins compared to last year. Operating expenses of 13.5 billion were at the low end of the guidance range that management provided in the last quarter and is up 2% year over year, which is rather good. In the next quarter, management expects operating expenses to be between 14.4 billion to 14.6 billion and other income and expenses to be around a negative 200 million range, excluding any potential impact from the mark-to-market of minority investments with a tax rate to be around 16%. Therefore, I expect net profits next quarter that could remain flat or even come down slightly. For the balance sheet, Apple's overall term debt position have reduced this quarter as Apple is committed to make use of its stronger cash position to draw down both debt and buy back shares. During the quarter, Apple has returned nearly $25 billion to its shareholders, including a $3.8 billion in dividends and equivalents and also $15.5 billion through open market repurchases of 85 million Apple shares. The accelerated share purchase program in August resulted in the initial delivery of retirement of 22 million shares. Inventory turnover, an important metric for retailers to measure the stock movement from Apple's warehouses, remains strong at 38 times. But inventory turnover year on year has slowed slightly at a negligible negative 0.02%. This decline is negligible, and we shall continue to monitor its inventory going forward. I look at net ROA instead of ROA, or the return on assets, for a clearer picture of how the company deploys its net assets, and I set a basic hurdle rate for growth companies such as Apple. Its latest net ROA sits around 40%, but these have declined compared to last year from 46%. This is due to their slower returns on their higher asset base. Despite this, a 40% net ROA is still above the industry's average 10%. Free cash flow as at fourth quarter 2023 is US $6.35 per share, much higher than the previous quarter of $1.68. At $6.35 per share of FCF, this is roughly 21 times its current share price versus the industry 39 times current prices. So let's look at other valuation metrics next. Apple's current forward PE is sitting at 32 times earnings, with their share price now at around $192. Apple's median PE is at 25 times, while the industry's PE is at 28 times. This shows that Apple's current multiples valuation is already overbaked. And based on my PE forward valuation metric, Apple's share price to me should be around $154 to $164 without further upside surprises. Its current share price of above 190 is already signaling a severe overvaluation and should be corrected in the near term. I believe investors are pricing in the bright future prospects of Apple that has not yet been priced in, and this includes the Fed's decision to probably cut rates by next year as well. Pricing in my very conservative expected returns from a discounted earnings perspective, Apple's valuation to me should be worth around $890 billion, or just about 2 times its 2023 revenues. Current share price to revenue is already 7.9 times 2023 revenues, indicating that it is already far away from my comfortable margin of safety. Can Apple continue to go above the $3 trillion valuation mark or above $200 per share in the near term? I really don't know. But if it does, then Apple will be put under a lot of pressure to deliver the desired returns year on year on its equity. In conclusion, Apple's advantage is in its cost structures, where the cost structures of new products tend to be higher than the products that they replace. It happens because Apple always adds new technologies, new features, and then they work through the cost curves over the life cycle, and they tend to get the benefits as time goes by. Apple's vertical integration of its own technology, including its silicon chip manufacturing, will also become a huge competitive advantage moving forward. And as mentioned on my previous point, it will eventually move past its cost curve and create higher margin mix for Apple over time. We will be watching closely the recent case of the temporary ban of the Apple Watch 9 and Ultra 2 due to the ruling from the US ITC over a patent dispute of its blood oxygen monitor that could affect the wearable's performance forward revenues. Overall, I still believe in the Apple's vision of building a strong ecosystem, especially in their Apple services business. The launch effectiveness of the Vision Pro next year remains to be seen, but management is positive about it, as this will be the only wearable that will closely be managed by Apple via the Apple stores only, unlike the other grab and go wearables that it currently has. I'm confident that even though we may or may not see a near-term correction of the stock, I think that over time Apple's value will add and slowly be reflected in its share price and compounded year over year as new innovations come about. We prefer the tortoise to eventually win the race sustainably. Till then, in my next episode, I'll see you guys and for the win. Hopefully you guys make money in the current rally. Alright, see you in the next episodes. Goodbye.